I'm also with you, partner from 3X Capital, and today we have an exciting guest, Aurelio Perucca from Splint Invest, who is the Chief Executive Officer of the company. And today he will introduce a lot of interesting things to you about real-world assets, something that we are actively exploring, discussing with you during the past couple of months. So I'm excited to hear more and learn more from you, Aurelio.
Yeah, thanks for inviting me on. It's a pleasure to be here.
Perfect. Would you like to share your screen and present something to us?
Yeah, of course. Happy to get started. So, welcome everybody. As you learned, my name is Aurelio, and I'm one of the co-founders and CEO of Splint Invest. And you can trust me when I'm saying that Splint Invest is the easiest way for you to diversify your investment portfolio with alternative assets, really like an expert. But since I don't know like all your backgrounds, and maybe we have people with different level of expertise in the area of alternative investments, let me start with a very basic question where I would like to explain what are actually alternative investments. And I think this is a very broad term, and people in the market use it for many different things. So I don't think there is a clear definition which is universally valid. In our case, when we talk about alternative investments, we talk about real world assets like luxury items, collectibles, which are appreciating in value over time. You can see here a few examples of assets we tokenized in the past. So we're talking about cars, handbags, art, diamonds, watches, champagne, even Lego. Even Lego can be an alternative investment. So as you see, the variety is broad, and we really it's one of our main objectives to make sure that we help you to diversify in as many different assets as possible. Now, you might wonder, like, why do we invest in such assets? Like, what's the reason behind? And actually, what we observed in the past is that such assets appreciated quite nicely in value over time. So they deliver a very nice return. And another very positive or another benefit of those assets is actually that their value is highly correlated with inflation. So investing in real world assets can be a hedge against inflation, which was probably very important over the last couple of years. And additionally, such assets correlate in a lower way to economic downturns. And therefore, this category of alternative investments of luxury item and collectibles is a very established investment category, especially for family offices and ultra high net worth individuals. So, but before you get started, just let me quickly summarize for you guys the most important things to keep in mind, because investing is always related with risks. So it sounds good, right? It's not like correlated with economic downturns. It grows with inflation. Sounds amazing. But as you can see, the advantages are obviously a potentially very high return on investment, also a very limited downside risk, because we're always talking about tangible real world assets. So the downside risk is almost never zero, which in other cases, like with stocks or cryptocurrencies, the downside could be actually zero. And also, as I mentioned, the very positive aspect of real world assets is the low correlation with stock markets. But on the other hand, and I think this is very important to keep in mind before getting started, there are also, from my perspective, two important disadvantages or things to keep in mind, let's call it this way. We're talking here about very long-term oriented investments. So we're talking about like a holding period of at least 2 years, but usually 5 to 7 years. So very long-term oriented. And we're also talking about, we call it semi-liquid assets. So like cryptocurrencies can be traded at any point in time, almost immediately, instantly. Same with stocks and ETFs, you have a very high liquidity. With real-world assets, the liquidity is not at the same point. And if you are forced to sell because you need the cash, it might take a few weeks or months to actually exit all your investments. So keep this in mind whenever you think to start investing in real world assets. Now, what is our role in all of this? We help retail investors to diversify their portfolio with such assets with a very easy and uncomplicated way. As you can imagine, like investing in a Picasso, in a Ferrari, in a Hermes bag is related with a lot of effort, uncertainty. It's a complex process. You have to take care of storage, insurance, buying and reselling. So a lot of time consuming, a lot of effort, and we take care for you of this process and make it possible for you to invest in those assets in a very secure and easy way through our mobile app. Additionally, and this is from my perspective the most important role we have as a company, is we make sure that only the best assets are available on our platform. So they're handpicked. So there are experts in every category spending a lot of time of their life in learning about art, handbags, wine, whiskey, to really gather the expertise needed to select the best assets, because only the best assets will be a successful investment. And everything we are offering is combined through our mobile app, which makes it possible to start investing with very, very low tickets. So with 50 euro, you can get started, and everything is managed through the possibility to be fractional owner of an investment. So it's very similar to fractional investing in stocks. That's something we know from Robinhood and other platforms. We're doing exactly the same thing, just with a different underlying. Ivan, maybe a question. Do we answer questions from the community directly or at the end?
We will be answering all the questions in the end. So we have the questions here in the software. Yeah. All
okay,
good.
Cool.
Great.
So then
I think you will cover
go ahead.
the two of them till the end.
Perfect. So, and as I mentioned, like there are very, very established companies in the background with the expertise needed to select the assets. So it's not our expertise, because we are like a fintech company. We are the platform. In the background, we collaborate with established companies working in this industry for many, many years, with a lot of experience and a huge track record. So here you can just see a few examples, but we are talking about companies like Maddox Advisory, which is linked to the Maddox Gallery, the Car Crowd, Watchbox, Brepburn Whiskey. So very established companies in their industry, and we collaborate with them to select only the best investments and the best assets to then be published on our platform. In the last couple of months, we successfully already exited some investments. So to give you a little bit of an understanding on the potential returns and the potential holding periods. So here you can see a very recent example. So we exited one of our Chagall paintings yesterday. It was I would call it a lucky punch. So due to our amazing network, we were able to purchase this painting in December last year, significantly below market price. And already in February, we received a very nice offer from a collector, which was willing to pay 15% more than we actually paid for it. And we decided to resell it immediately rather than holding it. And our investors had a very nice realized gain of 15% over a few months. That's just one example. We also exited a whiskey cask last year, where we hold the cask for 1.3 years. Originally, very similar case, we planned to hold it for 5 years minimum, but then the value increased in a very nice way. So we decided to realize the gains immediately rather than waiting for a few more years. And the third example of an asset we successfully divested is a combination of champagne and Burgundy wine. Again, here we were holding it for almost 2 years, but since as you can see, like the value increased by over 60% during this time period, we decided to immediately sell it and to realize the profit. Our app is available since 2022 in Switzerland, so that's our main market. But we also launched a light version of our application in the UK and Germany. By light version, I mean that features like trading, in-app wallet are only available to Swiss users right now. Obviously, we are going to enable those features very, very soon to UK and Germany as well. But currently, if you're in the UK or Germany, you have limited access to the primary market only. Here you also can see the distribution. So as I said, main market is Switzerland, but we're starting to grow in Germany and the UK as well. And you can also see the average investment per person per year. It varies a little bit between Switzerland, Germany, and the UK, but to summarize it, it's something between 2,000 euro and 4,000 euro a year. Something which is very, very nice is that most of the users invest in several categories. So they really want to build a well-diversified portfolio and not just focus on one specific asset, which from my perspective is also the best strategy to make sure that on a long run, you have a positive development of your wealth. But I think most of you will have a lot of like operational questions, like how do you do this, how do you that? So I have prepared 5 slides where I'm going to really explain step by step how it works, what we do, and all the nitty and greedy questions. So I hope I can address most of your questions within the next minutes. If not, I'm happy to answer them at the end. So what's happening very, very first? So the step 1 is our research team is screening for interesting asset categories in the market. In this specific example, I would like to walk you through, we are talking about art. So let's say our team identified art as being a promising asset category we would like to explore. Usually such a research session takes a month. So usually we invest a month in doing research about the category to actually decide, is it interesting or not? Step 2, after taking the decision of yes, art is interesting, we screen the market for the top art investment companies out there. So we go out and check out which are the most established, biggest companies when it comes to investing in art. In this specific example, we identified Maddox Advisory as being a very known and successful company in art investments. We approach many companies, not just one. And at the end, we select the best ones from our perspective to work with. And the way how we select them is very, I would say, sophisticated and complex and also time consuming, because we run a very extensive due diligence on each company, which includes commercial aspects, legal aspects, regulatory aspects, but also like the track record and user feedbacks or customer feedbacks. And only if the company successfully goes through our due diligence process, they can become a partner. And if they successfully complete the due diligence process, they are an approved partner and are allowed to work with us in this asset category. Concretely, when we talk about art, currently we only have 2 companies we work with. One is Maddox Advisory and one is Artemundi. Both of them have different expertise in the art segment. Maddox is more known for print, photography, and modern art, where Artemundi is more known for traditional art and paintings. Artists like Picasso, Chagall, Dali, Giacometti, so this type of artists. So now at this stage, we established a partnership with Maddox. We signed all the contracts and they are an approved partner for Splint Invest. The next step is actually happens with the Maddox, with Maddox Advisory. So they have the knowledge about the art market. So they identify the most promising assets to actually invest in. In this specific example, Maddox came back to us saying, Splint Invest, you definitely have to invest in this original subway drawing by Keith Haring from 1984. And we take the offer and do an audit on the investment. So this is again our role. So we audit every investment. We audit it when it comes to the existence, the valuation, the storage, and obviously the investment case. So is there a potential value increase over time? Yes or no? And only if our audit concludes that yes, this is investment grade, we accept the offer and we purchase the painting. So in this case, our company decided, yes, this drawing is an amazing asset, it's an amazing object, we buy it. Together with Maddox, in step 4, we define what's the best holding period for this specific asset. Because it's not always 2 to 4 years. Some of the assets, they need more time to appreciate in value. Others can maybe be sold faster. So this is really a asset by asset decision. In this case, we decided to go for 2 to 4 years because we think this is the point where we can really maximize the return on investments, the return on investment for our investors. Step 5, is to calculate the total asset value, which includes the purchase price we paid as a company. It includes the total cost for storage and insurance over the whole life cycle, so the full 2 to 4 years. And it includes our service fee, in this specific case, 4%. Within the app, you can see the split. So in the app, you can see total asset value is 70K, for example. 65K are asset value, 2K are storage insurance, 3K are service fee for Splint Invest. This is displayed very transparently. Step 6, once we agreed on the economical terms, we pre-finance the asset. So it means we as a company purchase it. So we take it on our balance sheet because we believe it's an amazing asset. We tokenize the ownership rights on the Tezos blockchain, and we sell the tokens through our app to the community of investors at €50 each. So if you buy a token on our platform, then you become the co-owner of this object. So it's an ownership token, which defines the ownership of the specific object. Step 7 is obviously to sell all the tokens on the primary market. In case some of the tokens are not sold out, that's not a big deal because the asset is pre-financed. So if a token is not sold, it means that the token belongs to us as a company. It's not a crowdfunding mechanism where we collect money to purchase it. It's the other way around. We have the money to purchase it and resell it to the community. And once all the splints are sold, like that's how we call the tokens, we do a monthly revaluation of the value of the asset. So every month you see how your portfolio develops. It can happen that there is no change in value month by month because we're talking about very rare assets. So in this example, this drawing exists exactly once. There are similar drawings which are traded. Therefore, we can calculate a potential value development, but since they're not traded every month, sometimes there is no update. But we try to update the value every month so you can see the development of your portfolio. Obviously, you also have from time to time, you will have the need to exit an investment earlier. So therefore, we organize trading days where you can actually sell your tokens to other users within our ecosystem. Meanwhile, so before, we organized 2 trading days a month. Meanwhile, because the community is growing significantly, we have a trading day every week. So every Thursday is trading day, and you can trade your tokens with other users. So it means you can buy tokens of assets which are sold out, or you can sell your tokens to other users. Obviously, if you don't sell the tokens, you just have the buy and hold strategy, and you wait until we as a company sell the asset for you and return the cash to you as an investor. So maybe to give you, since I know that this community is very tech savvy and very interested in Web3 topics, let me quickly also elaborate how the technological setup works in the background. So we have 3 layers. We have the physical world, so reality, let's call it this way. Then we have the Splint ecosystem and the Splint ledger, and then we have the whole DeFi ecosystem. And let's quickly talk about the physical layer. What's happening? So we purchase the painting or the watch or the car. We transfer the object to our control, which is either our own storage center here we have in Switzerland, or to a storage center of one of our partners in Europe. To give you an example, storing handbags, watches, diamonds, and stuff like that is very easy. We rented with a Swiss bank a vault where we can store all those assets. That's pretty easy. But cars, for example, are more complex. So you need a dedicated car storage center. Same for whiskey and wine. So whenever we talk about the more complex asset category like cars, whiskey, and wine, we collaborate with storage centers which do only storage for investment wine. So we make sure that the wine is transferred to the storage center, and once we receive the confirmation of storage, we are happy and we go ahead with the process. So the physical object never moves. Once it's stored in one of our storage center, it stays there until we resell it at the end of the process. What's happening on the Splint layer? So as soon as we own the asset, we create centralized tokens on our own ledger. It's important because some of the users, they are scared of DeFi. Others are more motivated to explore. Some of them are scared. It really depends on the individual person. So and we work with a centralized ledger which interacts with the blockchain with the Tezos blockchain. What it means is, as a user, you decide who is taking care of the custody of the token. Do you prefer to have us centralized custody on our centralized ledger about ownership rights? Or do you want to export your Tezos tokens to your wallet outside our ecosystem and take it in self-custody? Obviously, you know better than I do what the advantages and disadvantages are of self-custody. One potential advantage in the future, which unfortunately is not materializing right now, but it will very soon, is in theory you could use our Tezos tokens as a collateral for decentralized borrowing or lending, because the underlying value, the car, the wine, the whiskey, is a very stable asset when it comes to the value development. It's not volatile, but it's unfortunately not yet possible because we don't have many partners who support us in this topic. And to be very honest with you, 99% of the users prefer to go for the centralized custody approach rather than the decentralized self-custody approach. This is why it's not top priority, but for us as a company, we are 100% sure the future will be decentralized. That's why we want to be prepared on a technological level, even if we do not fully use it today. So that's why you can choose. So if you keep it in centralized custody, you can unfortunately only trade it within our ecosystem. If you export, you can use any decentralized exchange potentially to trade the token. As soon as we sell the underlying asset in the real world to a third party, you receive a notification to import your tokens again in case you exported them. In case they are still in our ecosystem, they are automatically burnt, and you get fiat back on your bank account. So very, very simple. All right, cool. So then let's quickly summarize what we have achieved since we launched in February 2022 to give you a little bit of an understanding about size and assets. So we tokenized and sold over 220 assets so far. The community has a size of a bit more than 10,000 investors at this stage. In value, it means we tokenized a bit more than 12 million euro. This includes volume traded on the secondary market. And overall, as you have seen before, we successfully already exited 3 assets with a return on investment up to 64%. Right, so we're almost done. In case you're interested and curious, by the way, to test the app, you can scan the QR code here or go to the app stores and type in Splint Invest. And in the onboarding, you're asked if you have a bonus code. If you type in 3X with a capital X, you will get 100 euro bonus to get started. So that's on us for you to test the app and explore it on your own. Cool. Thanks a lot.
Oh, that's exciting, Aurelio. Thank you for sharing, and thank you for providing this opportunity for our community to participate. So I think we can stay in this screen, so our community members will be able to scan the QR code and get 100 euro starting balance. Your presentation was incredibly insightful for me. I'm not a fan of alternative investments. I'm actually collecting coins and some other things like silver spoons, buying them from different markets, but just for fun, without any thoughts to resell them, just to building my own collection. But it was really great to know more about your product. It looks incredibly relevant for the community to participate, because that's how they have the access to the same opportunities that high net worth individuals have. So they, of course, understand better how to invest in this type of alternative investments. But in general, looks extremely great, and I would love to test it myself. So thank you for sharing today. We have a lot of questions from the community. So let's start from the first one from Hank. where are the assets located?
Yeah, that's a good question. And we don't have one storage center. So we have a big one in Switzerland, in Bern, at the Berner Kantonalbank. Another one, for example, is in London. It's the London City Bond, where we store mainly wine. What else is a known one? Like art is as well stored in a free port in London, and another one we have here in Geneva, where we store art as well. So it really depends on the asset. We always choose the best option without any shortcut on quality. But on the other hand, we also try to always find the cheapest option to store, because if we pay more for storage, this actually leads to a lower return on investment for the user. So that's where we try to balance quality, but at the most efficient cost. But all of our assets are in Europe.
Okay, wonderful. And can you please tell more about your current business model and how do you see it will change in the future? So based on something that you have already done, I believe you find so many interesting ways how you can monetize your platform.
Yeah, totally. So I think it's a very simple business model at this stage. Our fees are transaction based. So whenever you invest on our platform, a part of the amount is for us and the other part for the asset. And usually our transaction fee are 4 to 5%. It's not always the same amount because for assets we are keeping for a longer period, we tend to have a little bit higher fees compared to assets we keep for a shorter period. And today the fees are fully paid by the investors. What our plan is on the mid to long term, we would like to transfer the fees from the investor to the supplier. The problem is we're a platform, and as a platform, you have to solve the chicken or egg problem. And like if you don't have a community which is investing, no one is actually willing to collaborate with you and offer products. On the other side, if you don't have products offered, no one is going to invest because you don't have supply. And what we learned in the very beginning is that since we are really solving a significant problem for investors, like they don't have access with small tickets to a Ferrari today, so we are solving that problem, means there is a willingness to pay for this service. On the other hand, we have the experts, which are specialized in car investments, and today they have an operating and running business. So they're doing car investments for ultra high net worth individuals, which are paying for. So they think it's nice what we're doing. They see the potential, but currently they're not willing to pay because we are a small community and they have a large business. So the power is on them. But on the mid to long term, if we grow the community to a significant size, we have more market power as a community and we can negotiate fees. And so long term, we will shift the fees from investors to suppliers.
Interesting. And what will be your strategy to grow the community and what social medias you would like to use for that?
So currently, one of our most powerful growth channels are referrals. We have an incentive system where invited users get a bonus and inviting users as well. So that works pretty well and helps to grow organically. But we also use a lot of search engine advertising, especially for search term related to specific assets, like how to invest in Ferrari, how to invest in Rolex. That's as well a very, very nice growth channel. And obviously social media. But since we are focusing on I would say more Web2 focused audience right now, we use traditional social media like LinkedIn and Instagram. In the future, we might think to use other channels. Like we also did a few experiments on Reddit, for example. But I think this is a very tough place to do advertisements. And so we need to learn a lot to make it a scalable channel. But we are exploring as well, I would say, more Web3 oriented communities and channels.
Yeah, understood. Great. We have more questions from Jay. Are there any assets you control which are turned into synthetics where the ownership rights remain with the owner, where sale of real world assets is separate to the synthetic sale but reflects the change in price since acquisition to sale? Interesting.
That's a very good question, and the answer is no. Because I mean, it could be an option how to solve the problem, but we decided to go with, from my perspective, a more secure option for the investors, where we actually transfer the real ownership through the token. But obviously, this is a valid solution. There, you're actually just representing the value. It's more like a promise. So you promise to the investor that you're going to mirror the performance of the underlying without actually transferring the investment of the underlying. The problem is what's happening in case of bankruptcy. So today, if our company is going bankrupt for whatever reason, our investors are still the owners of the physical items. It means that they're not part of our balance sheet and they're segregated. In the option with the syndicate or with the synthetic representation, in case of bankruptcy, you would lose your money because it's just a promise from us as a company to you as an investor. This is why we decided to not go this way.
Yeah, wonderful. I like this approach, and we see more and more real world assets that are using this synthetics approach. And from my point of view, there might be several risks, even something that you didn't mention, but the one major risk that you mentioned for investors is something that I'm not very excited about, and I don't want our community or someone else to participate in that type of investment. But we see a lot, like indexes for real estate in different cities. So very popular. One of the platforms called Parkle on Solana. Very interesting model they have. Also, we have additional question from Hank regarding the example of Ferrari that have been crashed. What is happening then if the Ferrari was crashed, or it's not possible?
I mean, never say never. But no, in theory, it shouldn't happen because the car is no one is driving the car. So no one is wearing the watch or the handbag. So the assets are stored and under custody without being used. Obviously, we have insurance for damage. So, for example, if the storage center is burning down, so that's covered by insurance. If something unexpected happens with the object, like I don't know, heavy rain or an earthquake or stuff like that, that's all covered by insurance. But an actual car crash shouldn't happen because no one is driving it.
Yeah, interesting. We had a very deep conversation with you on the previous week, and I was thinking to ask you if you have found a solution how to bring more liquidity to the secondary market already, and what ideas, what ways of the development you have in mind right now.
Yeah, so actually we did a few tests in the meantime, and what we also learned is by having a higher frequency of trading windows or trading days, we can increase liquidity. So this is why I was mentioning it before. Before we had 2 times a month trading day. Now we moved to every week. So this already increased liquidity a bit. And we are also exploring different options because what we learned is often people looking to sell their assets do it because they need cash. So we currently in our community, we have not too many gamblers or traders. They follow more this buy and hold strategy, but from time to time something happens and then you need money, and so you are forced to sell. And one option rather than selling could be to use your token as a collateral and take a loan. So one thing we are exploring is, can we integrate decentralized lending and borrowing on our platform by using our Tezos tokens as a collateral? So this is one thing we are exploring. So you wouldn't sell actually your token, you would just pledge it as a collateral to take the money. And hopefully at a later point in time, you can buy it back and you're still the owner. So that's one of the things we are exploring. Another solution we're currently exploring is, meanwhile, there are a few players in the market offering a very similar model to our approach. And each and every player has his own community, which is isolated. So we are also talking to other companies to see if there is a possibility to create a shared secondary market, combining all the users to really create a bigger audience to trade, rather than having this isolated Splint community, a timeless investment community, Finexity community, and so on. really combine everyone to have a bigger pool of users to trade with. But I
Wow.
think this is more complex because it involves multiple parties.
Yeah, sounds like great ideas, and I'm looking forward to see how you will improve. And as I mentioned, we can collaborate a lot with our portfolio startups, especially blockchains, in order to bring more liquidity to your product. So let us know if you would be interested to explore. Happy to connect you to some other players that can bring more liquidity to the assets. Also,
Yeah, totally.
we have one more question from Jay. Do you also leverage against the value of the assets owned whilst the asset is under ownership? And what happens if the event of default of the leveraged asset?
So I can't answer the second part because we are not doing it. So we are not leveraging the underlying asset whilst it's owned by the investors. So as soon as it's sold on our platform, it's under custody and no one is touching it, no one is using it, no one is pledging it. We know that this is actually a missed opportunity in some cases because in theory we also thought about business models where we're saying, okay, like we could actually rent the Ferrari to third parties, and the rental income could be distributed as a passive income to the investors. Could be a valid model. The problem is all those ideas ended up in the same point. The risk is way too high because if something happens, it's a mess. So we decided to go for the safer option and focus on the value increase over time, so the appreciation of the value rather than an income generated by the asset. But it's a cool idea. We thought about it as well, and maybe in the future it's a thing to do.
Yeah, thank you, Jay, for your question. I'm also curious to know how the decision-making process works when you want to liquidate the asset. And for instance, if the investor who owns a part of the tokens don't want to liquidate, so he say like, no, I don't want to sell, but the majority of the community works. How you plan to solve that? Maybe you had some situations like that.
Yeah, I mean, basically the way how it works is when you buy the token, you sign up to the terms and conditions. And in the terms and condition, it's defined that we are the representative of the community of owners, and it's always a majority vote, or the majority takes the decision. So, and then we define rules. So, for example, this specific painting, we are keeping it for 2 to 4 years, and we plan or we estimate the potential growth at 10% per annum. So, as long as we are in this 2 to 4 years period and the return is within the range expected, we are, as a company, allowed to act on behalf of all the other investors without asking. If we want to sell before this point in time or at another price, we ask the community to vote. And based on your ownership, you have voting rights. And if majority of the community says sell, we're selling it. If majority says no, please don't sell, we don't sell.
Yeah, and how did you organize technically the voting system? Is it built into the application, or you have some separate software that you use?
So for now, it's semi-integrated in the application, but it's nothing fancy. It's a poll. Like we can initiate a poll, and then every investor receives an email where the investor can click on it and take and participate. And in the background, it's automatically calculating, like based on your ownership portion, it's calculating the result.
Yeah, interesting. Thanks. And question from me. So, what alternative investments and categories excites you the most right now, and why? Maybe you have some trends. You see a lot of things are happening in the space. So maybe you can share some insights with us.
Yeah, sure. One insight I would like to share, and it's kind of an advice. I would really not go for hypes. Um, Unfortunately, this is something we see a lot in the market, and like I'm pretty sure you observe very similar dynamics in the crypto market. People tend to buy when there is a hype and the price is already high. So the worst thing you can do is buy high, sell low. But unfortunately, if you follow hypes, this is what you're often ending up doing. So what we try to do is we try to have a very recurring process of understanding the market and constantly investing rather than following short-term trends. Because when you follow short-term trends, you risk, as I said, to buy high. Um, the category which excites me the most is whiskey casks. I'm not a whiskey fan. I don't like drinking whiskey at all. But the underlying investment case with whiskey casks is very rational. So whiskey is maturing in the cask, and we all know that older whiskey has a higher value than younger whiskey. So if you buy a cask today and you wait 5 years, in 5 years you have whiskey which is 5 years older, so it has a higher value. It's also a little bit like you have to be very patient because the appreciation is coming with time and not by hype. And you are not like, you shouldn't expect a 10x return. Like, we're not talking about, I don't know, skyrocketed returns, but stable returns, plannable returns, and that's what I like personally as an investor. Obviously, what we see on our platform is that the community loves art. There is a high demand also for precious metals and diamonds. Cars seems to be very exciting as well, which personally I have mixed emotions. So the market and then the research team is saying cars are a good investment category, but we have some doubts as well, because what's happening if, like, all the cars, like the classic cars in the old times we know today, they all have old school engines and no electronical vehicles. So what's happening if, I don't know, in 10 years we're not allowed to drive such cars anymore? What's happening with the value? So cars have some sort of uncertainty when it comes to the next few years, but still very exciting because they are iconic. So, and like, a Ferrari is a Ferrari and will stay a Ferrari, and it's a brand which has a huge power and visibility. So, and handbags. Handbags is something which is very, very cool at the moment. From my perspective, a very interesting market for many different reasons. And Lego. But Lego is, I think, a very complex category. And I'm a huge Lego fan, so I'm not a Lego investor because I really like to building the Lego and playing with it. But it's also a very cool investment category if you choose the right boxes. You don't open them for a while and resell them after they are out of stock. That's a very nice investment opportunity as well.
Well, interesting. I was a big fan in my childhood of the Legos. I had the largest castle at home, but unfortunately, it is missed right now. So I'm dreaming one day maybe someone will find my castle and give it back. So really cool category. Enjoyed our conversation today, Aurelio. I see that we are moving closer to the end. The last question from myself, it will be like, what is your personal portfolio, how it looks like, and how do you see it in the nearest future? So what categories are investable from your portfolio specifically?
So in you're talking about the portfolio at Splint Invest, right? Not my private portfolio as an investor.
Yeah, your private portfolio.
My private portfolio. So I'm very old school and not very exciting and low risk. So I would say 60% I'm investing in ETFs, using a Swiss Neo platform. So because I know the founder, so they have the lowest fees to invest in ETFs, so that's why I'm using it. A little bit of the money is invested in real estate, and yeah, obviously some private equity, and obviously a Splint. So, but I would personally, my rule of thumb is I would never allocate more than 5 to 10% of my total wealth in alternative investments like cars and art. So I'm closer to 6-7% right now than 10. So as a rule of thumb. So my majority is invested in ETFs and real estate.
Understood. Thank you a lot. That was an incredible session today. I encourage everyone to use the code here, so you can join Splint Invest and try the innovation that was presented today by Aurelio. Thank you for joining us, Aurelio, and looking forward to our next sessions.
Cool. Thanks a lot. It was a pleasure being here. And in case anyone has questions, please reach out, provide feedback once you tested the app. It's always cool to get feedback and see what was working well and maybe also what didn't work too well.
Sure. Thank you, Aurelio. Bye-bye, everyone. Have a great day.
Yep. Have a nice week.